Hey guys, welcome back to the channel. In today's video, I'll be talking about my #1 hotspot for investing over the coming years and where I'm personally investing quite heavily into and where I see a lot of potential. This video has been highly requested, and if you guys have been following me on my Instagram, then you will know that I have recently purchased 2 properties to add to my portfolio in this particular market. And this is one of those markets where the fundamentals just make a lot of sense and the numbers are just extremely strong, way too strong for other investors to ignore. This is a video that you do not want to miss. I have put a lot of detailed research into this, and I have personally made investment decisions based on this research, and I'm about to share all of this with you guys. As always, please understand that this is not a recommendation. This is simply my personal research and my personal opinions, so don't copy my homework. Go do your own homework and research before investing hundreds of thousands of dollars into an investment property. The market that we are going to talk about is Perth. And I know a lot of you guys are very skeptical about this market for a number of reasons. You might have the opinion that Perth is a mining town, and because of that, it is too risky or too volatile to invest into. Or you might believe that because Perth has not seen any growth for the last 10 to 15 years, that you will never see any growth going forward. These are all very valid concerns that a lot of people have, but I think it is definitely good to keep an open mind and try to understand why certain things are happening in certain markets. Let's start by talking about the property cycle. We have talked about the property cycle a lot in my previous videos, and I personally think this is a great tool for us to use to try to find good investment opportunities. The property cycle theory is very simple and quite easy to understand. One of the most popular theories out there is the 18-year property cycle, and as we can see in this graph, this cycle runs for around 18 years and includes 3 main phases: the recovery phase, the explosive phase, and the recession phase. Looking back at our best performing markets over the last decade, Melbourne, Sydney, or even Hobart, it is very fair to say that these markets have definitely seen some explosive growth over the last few years. And it could be argued that these markets are currently in the middle or close to the top of the growth cycle. This will also make perfect sense because if we look at Melbourne and Sydney, the affordability issue there is becoming out of control. It requires a full-time income of 2 workers just to service a simple mortgage there, and they are absolutely maxing out their borrowing capacity to get into a property. And the same thing can be said for Hobart. The people there have the lowest income in Australia, yet they have one of the more expensive housing markets, and that's growing so fast that a lot of people are now becoming homeless. And we need to understand that Hobart was the cheapest market in Australia by a fair mile, but it has now become one of the most expensive markets outside of Melbourne, Sydney, and Canberra. So knowing that the markets we have just discussed are close to the middle or even the peak of the property cycle, where do you think Perth is on that property cycle? In 2001, Perth was the 3rd most affordable housing market in Australia, with the median house price of just $188,000. And this was when the mining boom started. And as a direct result of that mining boom, where people in the mining industry were getting paid upwards of $150,000 a year, which was a huge amount of money back then, the property market went absolutely crazy, and we saw an unbelievable explosive phase that took the median house price in Perth from $188,000 to $473,000 in 2007. And looking back now, that was the peak of the Perth market. That is a growth of $285,000 or 151% over a period of 6 years, or a yearly annualized return of 17% a year, which is once again unbelievable. Now going back to the property cycle, what usually happens after this 7-year explosive growth phase? Well, it is usually followed by about 7 years of a decline and then 7 years of recovery, which is exactly what we have seen in Perth over the last 14 years. A sharp decline after reaching the peak of 2017, and then now a lot of sideways action right up until the last few years. It is actually crazy how accurate this 18-year property cycle has been for the Perth market. It pretty much timed the exact boom and bust of this market. So let me now ask you a question. We have just experienced the recovery phase of Perth. What comes after the recovery phase? As much as I love this 18-year property cycle theory, it is only a theory, and we shouldn't use it to make our decisions without looking at the data and other research to verify our findings. At the start of this year, ANZ Bank predicted Perth will see a growth of almost 19% this year, making it the strongest performer in Australia. But we are almost at the end of 2021 and Perth has not lived up to its expectations. So what happened? Let's start by looking at this graph here showing the year-on-year change in the number of dwelling sales. As you can see, we have seen a huge increase in the sales volume in pretty much every single market, and this is quite common during a major property boom. However, what we can also see is the number of sales in Perth and the rest of Western Australia has increased significantly more than the other states. This tells us a few different things. First of all, this is a very strong indicator showing that there is a huge amount of demand in the Perth and Western Australia property markets. And this is not surprising at all because Perth also has one of the strongest population growths in Australia. To give you an indication of just how strong the population growth is in Perth, let's compare it to Melbourne, the migration capital of Australia and one of the most livable cities in the world. As we can see, Melbourne has seen some very solid population growth over the last 10 years, averaging more than 3% a year. This strong population growth no doubt played a very important role in the impressive capital growth we have seen across Melbourne. However, if we now look at the population growth in Perth over the last 10 years, we can see that this is even more impressive than Melbourne, much more impressive than Melbourne. And this all happened during a mining downturn, with another mining boom around the corner, and how badly Melbourne and Sydney has been affected by the extensive lockdowns with the loss of jobs and business closures. I personally expect Perth to become one of the best performing markets in Australia, as well as best performing economies in Australia in the coming years, creating a lot of jobs, a lot of high paying jobs, which is going to flow into the entire economy. Now, going back to the impressive sales figures for Perth, showing that there is a lot of demand, we have to also look at the other side of the equation, which is the supply, because the supply has to keep up in order for people to buy properties. Now, this is where it gets a bit confusing because there are actually quite a few people willing to sell their properties in Perth and the rest of Western Australia, which makes no sense at all because property values are actually increasing there. And this makes it even more confusing that people in Perth has one of the highest incomes, highest medium incomes in Australia. This is where I think it gets quite interesting because this is where the mental game comes in. Just imagine that you purchased a property in Perth 10 or 15 years ago, and over the last decade, all you have seen is your property go down in value over and over again, year after year. How does that make you feel about your investment? It is likely that you will have generated a very negative feeling towards this investment property in Perth, and that you'll be happy to simply cut your losses and try to get most of your money back. And I think this is exactly what's happening in Perth right now. After decades of decline, people finally see a rise in their property and they're happy to just let go and move on. This practice is actually quite common because we saw the exact same thing back in 2018 and 2017 when Melbourne and Sydney saw their correction. People sold at heavy discounts because they expected the market to go down further. In my personal humble opinion, it is a mistake to sell your property at a discount or even at a loss right now because the market is just starting to turn. And what most people tend to forget is that right after a correction comes a boom. And I believe this is exactly what we're about to see in Perth. Looking deeper into the numbers and data provided by CoreLogic, Perth has one of the strongest rental markets in Australia, and the demand for housing has increased significantly over the last year, with the rent for houses increasing by a crazy 16% over the last 12 months, and the rent for units increasing by 14% over the last 12 months. If you are trying to rent a property in Perth or you live in Perth, you will know exactly how bad the rental situation is. The vacancy rate across the entire city is pretty much zero, and people are fighting against each other just to rent a property. This combined with impressive population growth during a period where most borders are shut, it's the perfect ingredient, in my personal opinion, for future capital growth. Looking at this table provided by CoreLogic, there are some very important figures here. First of all, the median house value of only $556,000. This makes Perth the most affordable capital city in Australia. Secondly, the rental yields and the selling times, both of which are very important figures. As I mentioned at the start of the video, I have recently purchased 2 properties in Perth, and even though a rental yield for houses of 4.2% and days on market of only 22 days is extremely short, in some of the better markets of Perth, I have been able to achieve much better results. For example, the rental yield for my two properties are 5.5% and 6.2%, which are both very good numbers. And for the markets that I'm currently looking into for myself and for my clients, the days on market is around 15 days, which is a number you would expect to see in some of the hottest markets in Australia. The days on market of a particular market is very important because it shows just how hot the market is and how quickly a property is snatched up once it comes onto the market. With a days on market of only 22 days, in a market that has a bit more supply than most other markets, this is a strong indicator that Perth is really starting to heat up. And combined with the fact that the number of listings in the Perth market is down 26% from the 5-year average, the supply and demand equation of this particular market is becoming more and more unbalanced. These are only some of the factors that make me very bullish on the Perth property market. And we haven't even gone over the impressive income and employment data, the low housing supply, and the crazy land size that you get on some of these properties, as well as the favorable zoning that makes some of these properties very easy to develop. Let's now address the elephant in the room, the mining sector, and how this makes the Perth property market more risky. At least this is what people tell you. Personally, I do not agree with this argument. Saying Perth cannot grow because it is too reliant on mining is like saying Saudi Arabia is not going to see any growth because it's too dependent on oil. A similarity that I can draw is when people used to say Hobart cannot see any growth because it is too dependent on tourism and it has no other industries. I do agree that the mining boom contributed heavily to the impressive growth we saw in Perth from 2001 to 2007, as well as the fact the slowdown of mining did lead to a slowdown in the property market over the last 14 years. What we need to understand, however, if we think about it logically, we are now in 2021 and we can still buy a property in Perth at 2007 prices. And if we think about what has happened in some of our other cities like Melbourne, Sydney, Hobart and Canberra, all these markets have doubled in value since then. This makes Perth, in my personal opinion, an absolute bargain. But what about the Perth economy? A lot of people that I talk to have doubts about this economy because a declining property market is usually a strong indicator of a declining economy. Instead of listening to my personal opinion again, let's look at what the Consec team has found in its most recent report on the performance of the different states in Australia. As we can see in this report, the unemployment rate in Western Australia is improving and down 7.5% compared to the decade average. Population growth is up almost 1% on this quarter, giving Western Australia the second highest population growth in Australia, losing to only Queensland. And this population growth of 1% a quarter is down 38% from the decade average, which just goes to show how strong the population growth usually is and what to expect when our borders are open. Moving on, the most important and promising statistic here is the economic growth, which is up a staggering 23.3% compared to the decade average, showing a very strong recovery and giving Western Australia the top rank in economic growth in Australia. Looking at these numbers and statistics, it is probably very surprising to you that Perth is performing so well economically, because you have probably heard a lot of negative news and negative opinions from the people around you about how risky it is to invest in Perth. Look, I've said this before and I'll say it again. Opinions do not mean anything. You need to do your own research and verify those opinions to make sure that these opinions are actually valid. Let's now take a deeper look into the mining industry of Western Australia. As some of you guys might already know, the previous mining boom was mostly driven by the mining of iron and ore. However, the mining sector in Western Australia has changed since then. According to this article by Business News, the 10 biggest mining projects in Western Australia with a combined worth of $20 billion, which also employs 12,000 workers, is no longer all iron ore. In fact, out of these 10 projects, 4 of them were focused on the mining of lithium, which is an essential component to batteries. As the world becomes more and more aware of the effects of climate change, the demand for lithium and renewable energy is only going to increase. According to this article by Fast Markets, the demand for lithium is only going to grow faster in the coming years as the demand for full electric and hybrid vehicles continues to soar. If we look at this graph showing the lithium supply and demand balance for the coming years, we are expected to see a lithium shortage from 2026 onwards. The supply for all that growing demand will have to come from somewhere, and there is every reason for that supply to come from the lithium mines of Western Australia, because after all, Australia has the second biggest lithium reserve in the world. And this is only for lithium, and we haven't even talked about the other raw materials that are growing in demand, such as gold, silver, copper, and other natural resources that Australia has so much of. In conclusion, I am personally very bullish on the Perth property market, and I have definitely put my money where my mouth is by investing heavily into this market. However, I would strongly recommend you to do your own research before investing into the Perth property market. Just because I am bullish on it, my opinion could be quite biased. So it is important to do your own research and seek the help of other people who might have a different opinion. Alright guys, this brings us to the end of the video. I want to thank you guys for watching this video till the very end, and I hope you guys got some value from it. If you did, please do me a huge favor by hitting that like and subscribe button right there. You'll be doing me a huge favor. Stay safe out there, stay productive, and I'll see all of you guys in the next video.